On, we want to invite the first corporate on our show, and that's Saatvik Green Energy. This is one of the recent listings. It listed on the 26th of September. The issue price was 465. The stock now is at 500 rupees. It is a manufacturer of solar PV modules. Came out with the Q1 numbers. Manik, Garg, MD of the company, will be joining in. And what we'd like to talk to him about is, one, Q1 has been a very strong quarter, but is it sustainable? Secondly, the company is also planning to foray into inverters, so the rationale behind it. And third, the supply glut worries in the solar module industry. Manik, thank you very much for joining in. Let's start first with the Q1 numbers. Very strong, but it's also on a low base. Now, in Q1, you've done about 900 crore of top line, EBITDA margins of 20%. What would FY26 look like for the company? Any guidance you can share with numbers?
Hi, good morning. First of all, thank you for inviting me to the show. And it's been a good quarter for us. I think we've delivered some decent numbers, and I can't give you any future guidance, but this just shows that we've been growing year on year and quarter on quarter. And we're trying to improve our margin profile. Also, we're focusing a lot on that. That is as a result of the three things that we constantly focus on. First is capacity utilization. Second is our diversified customer base, and third is a strong order book.
Okay, all right. Yeah, go ahead.
And so all the three things combined, I think we are able to perform and deliver the results.
Manik, now you've come out with this set of numbers. You're listed as well. So an aspirational number is par for the course, and it's in line with regulations. Can you keep up this momentum? You've done around 900 crores in the first quarter. If I annualize that number, you'll be in the vicinity of close to around 3,700 to around 4,000 crores. With margins in high teens, is that doable? So ballpark 3,700 crores with 19% margins, that could be an aspiration for this year?
So in terms of run rate, if you see that, yes, obviously we'll be able to maintain this run rate.
Okay.
It's going to be at this at least with the current capacity utilization. And in terms of margins, obviously there have been certain orders that were executed this quarter that were high margin. Margin guidance I won't be able to give, but definitely margins are something that could soften over the quarters.
So a realistic margin guidance could be in the vicinity of around 16-17%. Would that be fair?
Again, I won't be able to pinpoint a number, but yeah, for now you can see that that's what we've been doing last year, and we feel that is something that we can maintain.
Manik, just a quickly, morning Prashant here. So will you actively diversify? Because on modules, etc., there is, as you know, the big concern is this is the best of times, absolutely the best, the peak, right? But then supply will come in, and demand will also keep up maybe, but there's a lot of supply coming, and large industrial groups are now getting in. The last one we heard was Mr. Sanjeev Goenka talking to us about more. I mean, they're also setting it up, and they're kicking off, and they're expanding, etc., both in panels and modules. So just wanted to understand, will you, do you agree with that this is in that sense peak business-wise in this segment, and will you actively diversify?
So there are two things. I think first of all, we continue to believe that the sector is going to grow. There is a lot of supply, that is a lot of demand that is there in the sector in terms of the capacities that have been laid out, the targets that have been laid out by the government in terms of the around 50-55 gigawatt is supposed to get implemented this year. And what the new manufacturing that is coming up is all of the latest technology. The earlier manufacturing, what we see today, the majority of the supplies of the old technology. So I think that is what is happening in the market in terms of supply addition. I don't see a particularly a threat of extended supply because of enough demand. And secondly, of course, over a period of 2 to 3 years, if we see, definitely that the demand will grow, but it will not grow at the same pace it's growing today. So that is why diversification is a very key for us in terms of maintaining our growth levers, and we are actively starting to work on that ahead of time. So that's why in the last quarter of last financial year we added solar pumps as one of the divisions, and now we are adding inverters as one of the divisions.
So what would pumps and inverters contribute going forward in terms of revenues? I mean, what's the ideal mix going to look like?
Right. So majority of it will still be modules backed by backward integration into cells. But solar pumps and cell and inverters would be in the range of 5%.
By?
Yeah, 5%.
No, 5% this year or 5%?
5% you can say for FY27.
FY27. Okay, just a quick word. What is the current pricing of solar cells and modules, and how would it compare with, say, 6 months ago or 1 year?
Right. In terms of modules, I think the prices sort of bottomed out. So cells, if we see Chinese cells, they are getting imported after duties at around 5 to 5.5 cents. And the module prices, again, range around 16.5 cents. And they sort of bottomed out. And from here on, I think the prices are going to sustain if nothing major happens.
Okay. All right. Manik, we'll leave it there and look forward to our future conversations as well. Good luck as you execute and diversify. Thank you for joining us here.
Thank you so much.
Thank you. We'll take